This is a strategic performance analysis for Microsoft Corp covering the first quarter of fiscal year 2026. In the executive summary, we see strong cloud dominance, with total revenue growing 18% to $77.7 billion. Azure and cloud services grew 40% year over year, reflecting demand for AI-integrated workloads. Operating income rose 24% to $38 billion. Key institutional highlights include $77.7 billion in net revenue, an operating margin of 48.9%, and a commercial backlog of $392 billion. Azure and cloud services acceleration at plus 40% year over year defines the core growth narrative. Operating leverage is evident with total revenue growth at 18% and operating expense growth at just 5%, leading to operating income growth of 24%. This resulted in an expanded operating margin of 48.9%. The intelligent cloud era is marked by Azure's 40% year-over-year growth. Segment revenue reached $30.9 billion, a 28% increase. Investment focus remains on aggressive data center build-out to support record retained performance obligation. Cloud gross margin stands at 68%, with slight pressure from scaling AI infrastructure. Reported net income reflects a $4.1 billion non-operational loss from the OpenAI equity method investment, but core operational earnings power remains intact. In productivity and business processes, M365 commercial cloud revenue is up 17%, driven by Copilot tiers. Dynamics 365 saw 18% growth. Segment income grew 24% to $20.4 billion, outpacing revenue growth. The personal computing segment generated $13.8 billion. Windows OEM showed strong 18% growth. Gaming performance was mixed, with hardware down 29% but services remaining stable. Surface continues to focus on premium, AI-capable hardware. Accelerating AI capital expenditures reached $19.4 billion. Strategic investment in property and equipment increased 30% year over year, signaling a sustained high CapEx pipeline for fiscal 2026. Total RPO, or backlog, stands at $392 billion, representing 51% growth. Approximately $157 billion of this is expected to be recognized as revenue over the next 12 months, providing strong visibility into cloud demand. Key watch points and risks include a $28.9 billion IRS tax dispute, the high cost to scale AI infrastructure, cybersecurity threats, and intense competition in cloud foundation model selection. Overall, Microsoft delivered an exceptionally strong quarter. Revenue rose 18% and operating income jumped 24%, driven almost entirely by cloud and AI, with Azure growing 40%. Operating leverage was powerful. Expenses grew just 5%, pushing operating margins sharply higher. Reported net income growth looked softer, but that was due to a one-time $4.1 billion loss tied to its OpenAI investment. The real story is strategic. Microsoft is rapidly scaling an AI-centric cloud model and locking in demand, as shown by a 51% surge in commercial backlog to nearly $400 billion. Core earnings power is improving, investment will stay heavy, but competitively, Microsoft is clearly winning the most important long-term AI workloads. Thank you for watching this video. If you have any questions, please feel free to leave us a comment.
Bye.